Welcome, everyone, to the Deep Dive. Today we're doing something pretty interesting. We're taking what looks like, maybe the driest document ever, Compass Group PLC's 2024 annual report.
Yeah.
And our mission is, well, to peel back the layers, find the surprising facts, the crucial insights hidden inside, basically give you a shortcut to being, well, really well informed about this huge global leader in food services.
That's exactly right. And it's not just about reading numbers off a page. We're really going on a journey here to understand not just the financials, but the thinking behind them, the strategic calls, the human element, which is massive, and the wider impact of a company that literally feeds millions of people every single day. We'll connect those dots, between the money, managing people, sustainability, how it all weaves together.
Okay, so buckle up. We're about to unpack what makes this company tick. From its financial health, its growth engines, to its commitments to people, to the planet, and how it handles all these, complex global risks. So as we start thinking about a company this big, you might not even realize they served you lunch today.
Yeah.
What is the first thing that kind of jumps out at you?
Well, the first thing, even before getting into the weeds of the report, it's just the sheer scale and the consistency to deliver the kind of results they do year after year in a market that's global, diverse, often pretty volatile. It just speaks volumes about a really effective operational machine they've built.
It really does. Okay, let's just hit those top line numbers because they basically scream strong year. Imagine trying to run a global kitchen for millions daily and still pulling off 11% organic revenue growth. That's not just good. It's, strong year is maybe putting it mildly. And get this. Underlying operating profit growth on a constant currency basis, so stripping out the currency fluctuations to see the real operational picture, that was up 16%. 16. Plus, their underlying operating margin climbed to a solid 7.1%. They even mentioned that, industry outsourcing trends are helping, creating this exciting pipeline of new business.
Right, and it's fascinating how those numbers, especially that margin improvement, how it links directly back to one of their core strengths. Procurement. I mean, lots of companies buy food, obviously. But Compass Group uses its absolutely massive purchasing scale, not just to get quality products, but at prices that, well, it creates a huge competitive advantage. Smaller players just can't match that kind of market power, and it flows straight to their bottom line, boosting profitability.
That's a brilliant point. That scale is incredible. And talking about strength, their actual financial foundation looks super solid, low leverage.
Yeah.
They really emphasize their strong cash generation, which is key, right? It lets them invest back in the business and return value to shareholders. For instance, they had access to over, $3.2 billion in liquid cash.
Wow.
And they keep those strong investment-grade credit ratings from S&P and Moody's. Plus, their net debt to underlying EBITDA ratio, it's just 1.3 times, which, for anyone wondering, means their debt is less than 1.5 times their core annual profit. That's really low for a company this size. A huge sign of discipline.
Exactly. And so one of that financial muscle is, well, it's pretty profound. It's not just numbers on a page. That's stability. It attracts new clients looking for reliable, long-term partners for outsourcing, and it gives them the firepower for strategic investments, which brings up a key question. How does a giant like this balance investing for the future with, keeping shareholders happy now? It's a tricky act.
It really is a tightrope walk. Yeah. And the report does lay out their strategy quite clearly. Something that caught my eye was this dual approach. They're making strategic acquisitions, but also selling off bits of the business at the same time. What's the thinking there?
That's a great observation because, a lot of companies just focus on buying. The Compass seems to be almost like pruning its portfolio to make the core stronger. So, for example, they brought in CH&CO, a big catering player in the UK and Ireland, and Van Mayens in Germany, known for high-quality cook-and-freeze meals. The board okayed these because they add specific skills, increase scale, and genuinely promise accelerated growth and margin progression. But, and this is crucial, they're also trimming the edges, strategically leaving countries like Argentina, Brazil, mainland China, the UAE, so they can focus resources on the bigger, developed markets where they see the most potential. It also helps de-risk the whole portfolio from, less stable regions. It's smart, focused growth, not just growth for growth's sake.
Right, targeted. And what about the shareholders? Well, since 2022, they've handed back a pretty impressive $2.2 billion in surplus cash through share buybacks. And their total dividend for the year was almost 60 cents per share, which lines up with their policy, pay out about 50% of underlying earnings. So, a clear balance between investing ahead and rewarding investors now. Now, it's easy to get lost in those impressive financial figures, but behind every single one,
Well, there's a human story. Compass Group makes this powerful statement. People are at the heart of who we are and what we do. And when you have around 580,000 employees globally, that's not just a slogan, it's a massive responsibility.
It absolutely is.
Yeah.
And that scale means they have this unique chance to create what they call lifetime opportunities
Yeah.
and to really make a positive difference in all the different communities where they operate.
Hmm.
What really stands out, I think, is how deliberate they are about diversity, equity, and inclusion, DE&I.
Yeah.
And they've got the numbers to show they're actually, walking the talk. They definitely do. Let's look at the 2024 figures. Female representation. 43% on the board, 44% on the executive committee. 35% in senior leadership, 46% in all management, and 56% of the total workforce. That last one's over half.
Impressive.
And in the UK, they've made real headway. Median gender pay gap down under 10%. And significantly, a median ethnicity pay gap of 0. That's huge.
That is incredibly impressive progress, especially at their scale. And when it comes to bringing in talent, they're not just waiting for CVs to land on their desk. Their North America business, for example, is using targeted campaigns, automation, AI, all sorts of tools to actively find candidates and talk to them in their own language at times that work for them. Which raises the next question, right? Once they get these talented people in the door, how do they actually support and nurture their existing workforce?
Yeah, it looks like a clear priority. They offer various support measures, focusing on, physical, financial, and mental health for employees. Good examples are the UK and Ireland's You Matter network. That's for mental health awareness. And they've launched a global health and well-being forum. Plus, in the UK, big progress on fair wages. 67% of employees now get the real living wage or higher. That's a huge jump from just 37% back in 2020. That makes a real difference in people's lives.
Absolutely. And it goes beyond just pay and traditional benefits. What's particularly interesting, I think, is this unique setup they have, a direct communication channel between the group's workforce and the board. It runs through the designated non-executive director for workforce engagement, the DNED. It involves actual roundtables with employees from different parts of the business, which makes you think, how does that direct feedback actually shape decisions at the very top? You don't see that direct line very often.
No, you don't.
Yeah.
And that direct insight must be invaluable, right? Informing board talks and strategic choices that affect everyone. And beyond just internal stuff, they're making an impact at the community level too. Like Compass Spain has this Scholarist program, bringing about 3,000 lunchtime monitors into over 300 primary schools, creating support and learning spaces. And in Canada, their business opened an Indigenous teaching kitchen and developed Indigenous awareness training, all about fostering a more inclusive workplace. It's very practical, hands-on social responsibility. Okay, so from nurturing people, let's shift gears to another key pillar, purpose. Compass Group has what they call their Planet Promise, which is basically a commitment to building a sustainable future for all. And they've set some pretty ambitious environmental targets to back that promise up.
They certainly have. The climate commitments are significant. They're aiming for climate net zero GHG emissions by 2050. And they have validated science-based targets to cut emissions by 2030. That means a 46% cut in Scope 1 and 2 emissions, the ones they control directly.
Right.
And a 28% cut in Scope 3 emissions from the food and drink they buy, so their supply chain. All benchmarked against 2019. And a really key takeaway here, their intense focus on food waste as a major way to hit these huge goals.
Yeah, they've really put that focus into action. For example, Waste Not 2.0. It's their own tablet-based tracking tool for chefs. It's used in 12 countries, 9 languages, helps kitchen teams spot where they can cut waste, lets managers report carbon footprint. And get this, a food waste measure is actually part of executive bonus plans.
Now that's commitment.
Right, putting your money where your mouth is. And you know about Stop Food Waste Day, SFWD.
I've heard of it, yeah.
It's their global action day. In 2024, it reached like 112 million people in print, 9.2 million on social media. They even had cool innovations like an Unwaste Yourself AI tool from Compass Sweden.
That level of engagement inside and outside the company, that's a powerful driver for change. But beyond just their own kitchens, they're connecting these green targets to wider strategy, especially the supply chain. They're actively working with suppliers to decarbonize, even putting science-based targets into contracts for new suppliers in the UK and Ireland.
Mandating it.
Exactly. And in the US, Food by USA has its Diverse Supplier Accelerator program, specifically helping women and minority-owned businesses get involved, which leads to an important question. With all this effort, what are the actual climate risks they still face? And how are they trying to manage them?
That's crucial, yeah, because no one's immune. They identify risks like food sourcing and security challenges, supply chain disruptions, food cost inflation, all made worse by climate change. Their strategies to deal with it are varied. Flexible menus, really hammering that food waste reduction,
Yeah.
strategically diversifying where they buy from geographically, and even using alternative farming like indoor vertical farms. The report mentions a potential annual cost increase, 2.5 to 5% for beef and dairy from water stress in the U.S. and Australia in the long run, which really underlines their strategy to, as they put it, nudge consumers towards diets that are more planet-friendly.
Yeah, that integrated thinking really stands out, and broadening it out, they state it very clearly. Being an ethical, sustainable, and inclusive business is an essential part of our identity. What's convincing about that claim is how they embed it. Not just talk, but foundational policies, like their Code of Business Conduct, Business Integrity Policy, Human Rights Policy, which was just reviewed in September 2024. These aren't just words on a page. They're the actual rules guiding how they operate globally.
Absolutely. Purpose seems deeply woven in. Okay, let's pivot now to the performance pillar. But looking beyond just the financials, how does Compass Group ensure solid oversight and manage the huge risks of operating globally? Their governance structure is obviously key. The board sets the direction, purpose, values, strategy. And it's supported by four main committees: audit, corporate responsibility, nomination, and remuneration.
Right. And the strength of their risk management is genuinely impressive. Many companies are still figuring out how to even identify emerging threats, but Compass Group is actively tackling risks like generative AI, geopolitical tensions. That kind of forward thinking is a real competitive edge.
They really seem on top of it. Take generative AI. They see the risks, breach of data confidentiality, privacy issues, IP risks. So what do? Quickly put in place principles-based rules that apply globally, and developed a framework for responsible use of AI, very proactive. On geopolitical risks, Middle East, Russia, Ukraine, even if they don't operate directly there, they monitor closely. Employee safety is the priority. And cybersecurity, a constant battle for any big company. They have continuous assessment, monitoring, strong crisis plans, plus internal stuff like an annual cyber awareness week and regular phishing simulations to keep staff vigilant.
And you can see that proactive risk management paying off in tangible results, like food safety. They improved their food safety incident rate, the FSIR, down to 0.13. That's well below their own target of 0.17, and a 13% improvement year on year. That doesn't happen by accident. It's a direct result of diligence. Which raises another point. How do they make sure the leadership team is truly aligned with all these strategic goals across such diverse areas? It's one thing to have policies, quite another to have leaders live them.
Great question. Well, the board's own annual evaluation consistently found that the board and its committees continue to be effective. So your oversight seems strong. And on executive alignment and pay, their shareholder engagement speaks volumes. They talked to over 100 shareholders representing over 3/4 of our issued share capital and found overwhelming support for our proposals on the quantum of opportunity. Basically, shareholders agreed with the pay structure. And that structure is explicitly performance-related, tied to clear metrics, like return on capital employed, ROCE, how well they use assets to make profit, adjusted free cash flow, AFCF, the cash left after everything, for reinvestment or dividends, and total shareholder return, TSR, how the stock performs for investors, core health checks.
Right, the fundamentals.
And interestingly, they note that executive salary hikes were actually lower than the average percentage increase for the wider UK population. Shows a bit of responsibility there.
So putting it all together, what we're really seeing is this incredibly comprehensive approach to governance and risk. It's not just about ticking boxes. It genuinely seems to underpin their ability to deliver, not just financially, but also on those broader purpose pillars we discussed. It's the whole picture, strategic foresight, careful execution, supporting everything else.
And there you have it, our deep dive into just one document, that 2024 annual report. It really has painted this multifaceted picture of Compass Group. Yes, robust financials and strategic growth, but also these deep commitments to their people's well-being and really ambitious environmental goals. It's so much more than just the numbers, isn't it? It's a story of a massive global operation managing huge complexity, very intentionally.
Absolutely. And I think what's truly significant, the key takeaway maybe, is how demonstrably integrated these pillars are. People, performance, and purpose. It's crystal clear these aren't just separate projects running in silos. They're interconnected drivers of long-term value, of operational excellence. Their viability statement in the report expressing confidence in facing future challenges. That confidence comes from this holistic, joined-up approach. They really live the idea that these pillars depend on each other.
So what does all this mean for you, the listener?
Maybe consider how a company's genuine commitment to its planet promise, to investing in its people, how that's really not just nice to have anymore. It seems absolutely essential to its performance, its long-term financial health. How might this kind of integrated approach start reshaping what we expect from all major global businesses in the years ahead? Definitely something to mull over as you go about your day.